Income statement for a sole trader. A sole trader is a business owned and controlled by one person. What is the purpose of preparing an income statement? It enables the business owner to calculate the gross profit and net profit. Gross profit is profit obtained after considering expenses that are directly incurred in selling products, such as the cost of transporting the goods into the business, carriage inwards. Gross profit is calculated by subtracting the cost of goods sold, or cost of sales, from revenue. The net profit is obtained after subtracting overhead expenses from gross profit. There are two ways of presenting the income statement, namely the horizontal and vertical formats. The horizontal format is also known as the T format. The first section is where the gross profit is calculated. The net sales is computed on the right, by deducting sales returns from total or gross sales. On the left, the cost of goods sold or cost of sales is calculated as opening stock, plus purchases, less purchases returns, add carriage inwards, less closing stock. The difference between net sales and cost of goods sold is gross profit. The gross profit is brought down on the right of the second section. Other incomes are added to the gross profit, for example, discount received and rent received. The overhead expenses are added on the left. The total on the right minus the total on the left is the net profit. If the total on the left exceeds the total on the right, there is a net loss. An example. The following balances were extracted from the trial balance of a sole trader on the 31st of December, 2020. Additional information. Stock was valued at $38,900 on the 31st of December, 2020. Required. Prepare the income statement for the sole trader for the year ended the 31st of December, 2020. The horizontal format. Income statement for the year ended the 31st of December, 2020. On the right, net sales is $384,600, which is $420,100 minus $35,500. Cost of goods sold is $221,500. Therefore, gross profit is $384,600 minus $221,500. Gross profit is $163,100. The section on the right, gross profit is added to other incomes. The total is $200,500. The overhead expenses are added on the left. Total overhead is $132,400. The difference between the totals of both sides is the net profit. It is $68,100. The net profit is entered on the side with the smaller totals so that the totals on both sides agree. The vertical format of the income statement is shown. Cost of goods sold is subtracted from net sales to arrive at a gross profit. Then, the overhead expenses are subtracted from the total of gross profit and other incomes. The result is the net profit. From the example, cost of goods sold is subtracted from net sales to arrive at a gross profit of $163,100. Then, the overhead expenses are subtracted from the total of gross profit and other incomes. The result is the net profit of $68,100.